Global technology stocks are under heavy pressure on Tuesday as investors reassess whether the extraordinary gains driven by the AI boom have simply gone too far and too fast. Now, what began as a pullback in just a small number of AI-related names is now developing into a broader sell-off across technology markets, with investors increasingly questioning whether current valuations can be justified by future earnings growth. So at the center of the decline was SpaceX, which is heading for a fourth straight day of losses after tumbling 16% yesterday. Now, investors were unnerved by reports that the company is preparing a bond sale to help finance ambitious AI expansions. And the timing's particularly significant because it also comes just a week after the company raised $75 billion through its IPO. Now, I think the concern here is not necessarily about the bond issuance itself, but it also does instead just raise this broader question about the sheer scale of capital that's being required for this AI revolution. For much of the past year, investors have been focused on the opportunities created by AI, but now we are seeing that sort of attention shift towards a focus on the costs. Now, the AI investment cycle has been built on this sort of enormous spending commitments for data center, infrastructure, advanced chips, networking, power generation. But there are actually growing concerns that the returns on those investments may take longer to materialize than the market has been pricing in. And as a result, we're sort of seeing this sell-off where investors have been locking in profits after a remarkable rally. I mean, we've seen some sort of memory chip stocks have been delivering triple-digit gains over the year to date. And that does mean that valuations have been stretched, making this sector quite vulnerable, I think, to any shifts in sentiment. At the same time, we've also got the macroeconomic backdrop, which is becoming a little bit less supportive. So we had that slightly hawkish bias from the Federal Reserve last week, and that was basically just started to reinforce expectations that the US interest rates could indeed move higher, or at least stay elevated for longer. And that's particularly important for tech high growth stocks because much of their value is actually derived from earnings expected years into the future. So when interest rates rise, those future cash flows become less valuable in today's terms. So higher bond yields also mean that the bond market and bonds become more attractive than high growth equities, so encouraging a rotation out of some of those big technology names. As far as sort of the macro backdrop is concerned, a big test is going to come tomorrow with US core PCE, the Fed's preferred gauge for inflation. A hotter than expected reading could actually reinforce that sort of hawkish bias from the Federal Reserve and potentially add more pressure to these tech stocks. As far as what we've seen, I mean, the Nasdaq fell 1.3% yesterday. Nasdaq futures are pointing to further declines of around 2.5% today. In Asia, that weakness has been even more pronounced. We saw the South Korean Kospi fell 10% as investors cut exposure to semiconductor and memory chip manufacturers. In China, we've seen Chinese equities listed in the Hong Kong exchange have slipped into bear market territory. So I think for now, this probably looks like a repricing and a revaluation. It's definitely not a collapse of the AI story, but we have seen very, very solid gains so far this year. So we are just seeing a repricing of expectations. I think investors still believe that artificial intelligence will be transformative, but I think the question is whether the share price has already discounted far too much future success. Markets are going to be, I think, increasingly focusing on execution and profitability as well as funding requirements. And that sort of maybe mean that the AI trade is shifting into a more demanding phase where enthusiasm alone will no longer be enough. For more videos like this, please do like and subscribe.